Hi friends, my name is Krishna. Welcome back to my YouTube channel. Today's topic is going to be again on journals. This is in continuation to our previous videos where I've explained so many journal entries. This video is going to be the last video in journal chapter. I'm going to close this chapter and getting into the ledger in next video onwards. So my request to all of you is please go through this video till the end. You will understand how the journal entries have been explained, number one. Number two, I'm going to create a playlist. I've already created, but I'm going to create playlist for chapter wise. For example, journals, there is a separate playlist. Ledger, there is a separate playlist. Subsidiary book, separate playlist. Bank reconciliation, you take any chapter, I'm going to create a separate playlist and keep respective videos in that playlist. Whoever is studying +1, +2, BCom, intermediate, or CA foundation, or CA intermediate, MBA, you guys can go through the playlist in the YouTube. You can see chapter wise. You click on that and keep watching those videos. It will be very, very useful for you. Right? So with that note, I'm going to get into the subject now. If you like that content, please like the video, subscribe to my channel, share this video with your friends and colleagues. My sincere request to all of you, please watch this video till the end. It is definitely going to be useful for you. Right? Without wasting much time, let us move on to the illustration. Okay guys, let us start with illustration 7. What it says is, transactions of Ramesh for April are given below. Journalize them. This is the problem, right? Let me explain one by one. First one, Ramesh started business with 10 lakhs. Ramesh started business with 10 lakhs. That means what? What comes in? Cash comes in. Am I right? What goes out? Nothing goes out. Who is the giver? Ramesh. Right? So, cash comes under what account? Real account. Ramesh comes under personal account. So, real account principle, debit what comes in, credit what goes out. So, cash is coming in. So, cash account debit. Ramesh is a personal account. Debit the receiver, credit the giver. So, he is the giver to Ramesh account. Instead of crediting to Ramesh, what generally we do? We credit capital account for 10 lakhs. This is the entry for the first one. Are you clear? Right. Move on to the next one. Bought goods for cash 50,000. He made it very, very clear. Bought goods for cash. So these goods were purchased by cash. So when we purchase goods, what comes in? When we purchase goods, what comes in? Goods. What goes out? Cash. Because he made it very, very clear. Bought goods for cash. So goods comes under real account. Cash comes under real account. So what is the principle under real account? Debit what comes in, credit what goes out. Goods are coming here. So entry is goods account debit to cash account. So goods can be replaced with what? Replaced with purchases. I'm not saying that goods is wrong. You can debit goods account to cash account. But since we purchased goods, instead of goods, you can debit purchase account. Clear? Right. Next, drew cash from bank 10,000. Drew cash from bank 10,000. Who drew the cash? Who will have authority to draw the cash? Proprietor. So proprietor is who? Ramesh. Ramesh withdrawn the cash from the bank. So this is business. What proprietor did? So he went to bank and from bank account, from his business bank account, he took cash. So who is the giver of the cash to Ramesh? Banker. Banker is the giver. And who took the amount? Ramesh took the amount, right? So Ramesh is the receiver. He is the one receiving, comes under personal account. Banker comes under personal account, he is the giver. Now what is the principal under personal account? Debit the receiver, credit the giver. Here Ramesh is the receiver. So what we are supposed to do? Ramesh account debit to bank account. Why bank account credit? He is the giver. Credit the giver. Right? Instead of debiting Ramesh account, what we are supposed to do? Drawings account. Because he withdrawn that amount for his personal use. So when the proprietor is withdrawing cash for his personal use, instead of debiting the proprietor name, what we do? We debit drawings account. So entry is going to be drawings account debit to bank account. Clear? Next, sold goods to Krishna on credit, 1,50,000 rupees. Sold goods to Krishna on credit. Guys, be very clear. He mentioned very clearly sold goods to Krishna on credit. So that means what? We sold goods. We in the sense business. When goods are sold, what goes out? Goods. What comes in? Nothing. Why? Goods sold on credit. Cash has not come. So if nothing is coming in, so the next question should be, who is the receiver of the goods? Krishna. Krishna comes under personal account, goods comes under real account. What is the principal under real personal account? Debit the receiver, credit the giver. He is receiving. So Krishna account debit, goods going out, real account, debit what comes in, credit what goes out. So credit goods account. Instead of creating goods account, you can still credit sales account. So Krishna account debit to sales account. This should be the entry. Next, bought from Sham goods on credit, 2,25,000. Bought from Sham goods on credit. So we purchased goods from Sham on credit. So when we purchase goods, what comes in? Goods. What goes out? Nothing. Why? He mentioned very clearly bought goods on credit. Since it is purchased on credit, nothing goes out. If nothing goes out and goods are coming in, your next question should be, who is the giver? The giver is Sham. Right? Sham comes under personal account. Goods comes under real account. So what is the principal under real account? Debit the receiver, debit what comes in, credit what goes out. So goods are coming in. So you need to debit goods account. Who is the giver? Sham. What is the principal under personal account? Debit the receiver, credit the giver. He is giving. So Sham account. Instead of goods, what we can do? We can debit purchases. So purchase account debit to Sham account. Clear? Next, received from Krishna, 1,45,000. Allowed discount 500. See, if you go up and see, sold Krishna goods on credit 1,50,000 we showed. So we sold goods to Krishna 1,50,000, but Krishna paid only 1,45,000. Remaining 5,000 we gave him a discount. So how do we record this? So here Krishna paid 1,45,000 to us. So that means what? Cash comes in. How much? 1,45,000. What goes out here? Nothing. Who is the giver? Krishna. Krishna comes under personal account. Cash comes under real account. So real account principal, debit what comes in. Cash is coming in. So cash account debit 1,45,000. Cash we received only to the extent of 1,45,000. And we allowed a discount of 5,000. Allowed, discount allowed is an expenditure. Discount allowed is an expenditure. All expenses and losses are to be debited as per nominal account. So discount allowed account debit 5,000. Right? Who is the giver? Krishna. Giver is to be credited as per personal account. Krishna account 1,50,000. Are you clear? Right. This is the entry. Paid Sham cash 2,15,000. Discount 10,000. Let us understand this. When we pay cash to Sham, why do we pay cash? Because we purchased goods from Sham. Right? See here, bought from Sham 2,25,000. So How much we paid? 2,15,000. So cash goes out 2,15,000. Clear? And we received a discount of 10,000. Right? How do we book it? So Sham is the receiver. Sham is the receiver because we paid cash, nothing is being received. So who is the receiver? Receiver is Sham. Sham account debit 2,15,000. Right? 2,15,000. For time being, let us put this amount. I'll tell you what exactly you need to put here. We paid cash 2,15,000. And what goes out? To cash. Cash is going out. So you need to credit 2,15,000. This should be general entry, right? But we received a discount of 10,000. When we receive the discount of 10,000, discount received is a income for us. So all incomes and gains are to be credited as per nominal account. To discount received 10,000. How much we credited? 2,25,000. So how much we are supposed to debit here? 2,25,000, not 15,000. This is how you need to make up your journal entry. So Sham account 2,25,000. Totally we have to pay 2,25,000. So we debited Sham for to the extent of 2,25,000. Cash is going out only to the extent of 2,15,000, and we received a discount which is an income for us, and I credited that amount with 10,000 as per nominal account. This should be the entry. Clear? Right. Next, cash sales for the month of 8 lakhs. Cash sales. We sold goods 8 lakhs. When we sold goods, what goes out? Goods. What comes in? Cash. Because he mentioned very clearly cash sales. Cash sales means we received cash and given goods. So what entry we book? Right? Cash account. Cash is coming in. As per real account, you need to debit. Cash account debit to goods account. Or you can say sales account. Cash account debit to sales account. Clear? Right. Next, paid rent 50,000. Rent paid. Business paid rent. That means what? Cash went out. Why do we pay rent? Because we receive the building facility, some services, some facility we would have received. So we generally name these facilities as rent. Rent is what? Rent is an expenditure. Right? All expenses and losses are to be debited. So rent account debit. Rent is an expenditure for us because we paid rent. So rent account debit and cash is going out. So cash account credit. This should be the entry for rent. Similar way, paid salaries 1 lakh. Business paid salaries. That means what? Cash goes out. Salary is what? Is an expenditure. All expenses and losses are to be debited. So salaries account debit to cash account. Simple. That's all about this journal entry. I'm closing journal entry chapter here. Let us move on to the ledger starting from next video. I hope you like this content. If you like this content, please like the video, subscribe to my channel, share this video with your friends and colleagues. Right? Thank you so much.